We begin in Japan, which until this week had one of the world's most aggressive monetary easing programs to boost bank lending and spur demand. But on Tuesday, the country's central bank ended 8 years of negative interest rates. The Bank of Japan had been reluctant to raise rates, fearing any potential deflationary cycle driven by low consumer demand. But recent wage hikes have signalled the country's economy can grow without aggressive stimulus. Emre Boz reports.
The Japanese flag hangs high above the Bank of Japan as officials announce an increase to interest rates, moving from negative 0.1% to a range of 0 to 0.1%. It made the decision to do so after last week's Shunto wage negotiations, where enterprise unions and employers negotiate annual wages. It saw some of the biggest companies in the country raise wages by 5.28%, the highest levels in over 33 years. The Bank of Japan expects that as wages rise, so too will prices.
Inflation is finally starting to take hold in an economy which has battled with bouts of deflation that's falling consumer prices really over the past couple of decades.
One of the goals of the Bank of Japan was to stimulate growth by keeping interest rates negative, where lenders actually pay borrowers for holding debt. It also prevents people from saving, as it would cost money to store cash at the bank. It was a policy authorities hoped would spur spending and prevent falling prices. Experts say that even though the central bank succeeded in avoiding a deflationary spiral, raising rates may once again put the brakes on consumer demand. But others argue the rate hikes will not be detrimental to the economy. Rather, it will increase spending and investment.
In terms of the outlook for growth, it's not that Japan will suddenly just go gangbusters like some of the Western economies have experienced post-pandemic. If anything, GDP growth will still be less than 1% for this year. And that's provided some of the wage hikes that was secured just recently. That begins to feed into the economy. Consumers are more willing, more confident to spend. Likewise, businesses are willing to not just raise those wages, but also invest in their people and in their businesses and ultimately grow the economy. So that is the kind of virtuous wage cycle that the central bank has been harping on for quite a while now.
It's a virtuous cycle authorities hope will drive economic growth well into the future. Emre Boz, TRT World.